Hello, everyone, and warm welcome wherever you are. If you were with us this morning, welcome back. If not, good to see you. Hopefully you can see my screen. Hopefully you can hear me. I've actually managed to remember to turn on my audio, so there we go. I'm just on the, Anna was on Renko there. I've just got, this is on the YM on multiple Renkos, which is a great way to apply the indicator in exactly the same way as you would on a multiple time frame. On the bottom, I've got the 15-second, the 30-second, and the 1 minute. And that is reflected up at the top here. And I'll just refresh these just to see that they're up to date. So that's 15-second. Let that settle. That's settling at 10 now. So we've got 10 points on the brick. Just see what this one is. This one's probably gone up as well. This is on 30-second now. Just let that settle. Okay, that's gone up to 15. So we've got 15 points there, and up onto the 1 minute. Just let that settle again. So that's 22 points. So, I mean, just to put that into context for you, each of these bricks over here is worth $5 a point. So it's over $100 on each of these bricks. So it's a sizable chunk of profit, if you will, on each brick. But as Anna said, it's trading on a non-time based. I'll go to the tick charts as well in this session too. It reveals momentum because what you don't see on a time chart, one of the things that you don't see on a time chart is momentum. What you'll see on a time chart at the bottom here is you'll obviously see volatility, you might see whipsaw price action, but that is in fact reflected on the Renko or the tick chart because they are independent of time. So as the market speeds up and slows down, the metric that governs the Renko chart and the tick chart is not based on time. In this case, it's based on 10 points. So as soon as 10 points have gone through, then the brick will close and off we go on to the next one. That has no aspect to time. Yes, it's set up against a framework of time, but in terms of the context of these bricks delivering, they have no relationship to time. Each of these bricks will form in a different time frame. Might be a nanosecond, might be a microsecond, millisecond, might be a handful of seconds in a sluggish market. And that's where you get these terrifically precise trends. And what we've got on here, we've got the trend dots, which are work very close to the market. Fantastic indicator with the Renko. And we've got the trend monitor. And what happens is the trend dots change first. We've gone blue, then we've rolled from the underside where we're basically pushing the market higher. Now we're rolling over onto the top, pushing the market down. So we're starting to see a bit of a downtrend develop. They also changed color, they've changed to red. But the trend monitor hasn't actually changed yet. And that's the way it's been designed because it's been developed to take a much longer perspective on the trend. You can see across the 3 time frames here, it hasn't transitioned at all as of yet because the two of them work together hand in hand to try to give you perspective from 2 different vantage points, if you will, from one which is very close to the price action, if you're scalping in here, and the other down here, which is a more considered view. It's taking a longer term perspective on what is going on. And that's why they work so well, because they give you these 2, not opposing views, but very different views of the same thing. One very close to the price action, one stepping away. And then, of course, what you get with the Renko is you get this very precise, these very precise trends building. There's no whipsaw, there's no spiky price action. But of course, what you don't get is you're not able to interpret volume price analysis without an associated time chart, which is where it all comes together. So basically, what you're doing is a blend of an approach trading non-time frame as opposed to one which is trading time frame with VPA. Just pop this up, you can see what's going on. This is the 15-second time chart. What have we got? We're always looking for anomalies. We're always looking at highs and lows. I mean, you can scroll back over here. We got a chunk of volume come in here. We had a wick to the upper body. What's that telling us? It's telling us there's a deal of selling in there. So what we're expecting is some weakness to follow, which it duly does. You're always looking at these. You're looking at the highs and lows. You're looking at the lows down here. We've got not a lot of selling going on down here. We had selling coming in down here. We had rising selling, rising volume, falling market, fine. And then we see that drain away. We get less selling, less selling. Then we start to see it pick up again. And that's the reason why. Then you get a repeat, if you will, up here. You've got 2 candles. You get this one, volume's fine on that, dropped away, pushed up. Then what happens? You get a big spike in volume, and yet the price action doesn't really go anywhere. But that's what you're looking for the whole time. You're looking for these clues, signals, you know, is this weak? Is it strong? Is it going to reverse? What's going to happen? And then you start to bring in the other aspects of the indicators. We've got a pretty strong area here on the accumulation distribution indicator, which is price-based resistance coming into play. So as we break through there, market goes down to VPOT, no great surprise, comes back up, retests. Now we're starting to break away from the volume point of control. Then as you start to break lower, you can see what I mean about the trend monitor. We go through here, but then as the trend starts to develop, we then get the transitional color change. In this case, it didn't go to darker blue as of here. This was a typical change here where we went bright red, dark blue, bright blue. On this occasion, we skipped the dark blue phase. We just went into the dark red, and we've come out the other side into bright red. And it's really giving us a strong comfort blanket, if you will, that the market is trending lower at the moment. I'm keeping an eye on what's going on in terms of the VIX, which I've got over on another screen. I'll pull that over in a moment. So that's what we're doing the whole time. And then we bring the other indicators in. As I say, we're into the volume point of control. What are we looking at on the VPOT? What we're looking at is the whole area of volume. Clearly, volume is falling away, which is good, which means that the effort required by the market to move through there is going to be less than would be required if we're moving through an area like this. So as this falls away, we would expect that the market will move through there with relative ease because there's very little in the way of volume to provide a support to the move lower. In other words, it's not going to congest at any particular level, particularly where you get these low volume areas. That's where you expect the market to move through pretty swiftly. Then below that, we've got some more well-defined price-based potential support coming into play here. But bear in mind, this is all against the framework of a 15-second chart. But it's a great way to learn. It's a great way to use the indicators. I use this chart all the time because it gives me a heads up as to what's coming up at me in terms of a 1-minute time frame if I'm scalping, or a 2-minute, whatever it is. It just gives me that. It's like an early warning signal, if you will. I'm so close to the market using a 15-second time frame. I could go to 10, I could go to 5, but 15-second I find is my comfort level, if you will. You can see the market continuing lower, nice widespread candle, good volume associated with that, no wick. So what's that telling you? It's just confirming that volume and price are in agreement. Then we get weakness on the next candle, tries to rally. Lots of volume coming in on that one. Sorry, that was this one. Tries to rally. So the price action alone is telling you there's some weakness there, decent volume under that, not huge. Next candle is another widespread down candle, very similar to this one. Looks okay, maybe one a little bit wider, bearing in mind the volume on this one was that, and the volume on that one was slightly higher, but all things being equal, not too bad. Market's trying to rally, volume doesn't look particularly great on the up. Let's see what the next one does. Okay, that looks okay. Just keeping an eye on what's happening on the VIX. It's kind of flattening off a little bit, has been falling quite heavily, but now it's starting to flatten a little bit, which is no great surprise. And the next point of where the market may pause on this particular time frame is obviously when we get down to these levels. And if we want to see what's going on the slower time frames, then we just move up onto the next one. Now we're on 30-second. What have we got at 30-second? Well, if we didn't realize it on 15-second, on 30-second, we've got the volume point of control sitting right below. So what do we expect to see? If we're on a 15-second chart and that's all we're using, we're completely blindsided by that. We have no idea that's happening. As soon as we move to 30-second, it'll tell us why the market has paused at 380, another 20 points below, because we're now getting to the volume point of control on that particular time frame. Heavy volume, heaviest concentration of volume, as you would expect. Not a great deal in terms of price base. These thinner lines, basically the indicator, the beauty of the indicator is twofold. First of all, it presents these lines absolutely pinpoint accurate. These are not wide, vague areas of support and resistance. They are pinpoint accurate to the nearest point or pip, whatever chart you're on. And secondly, they present these areas graphically, so you don't have to draw these in. they are presented in their strength by the thickness of the line. That's how the indicator works. So the more frequently a level is tested, then the thicker that region will become. And when they get these clusters together, those will be particularly strong. So you might have 3 or 4 which have only been tested once or twice. And it does actually tell you over here, you can probably see it. This one's been tested once. So, you know, it's a not a strong area at all. But if you had a group of those, or it was in amongst a group of areas where you had thicker lines, then it is going to come into play. Exactly the same principles here we see with the trend monitor. Bright blue, darker blue, out the other side into darker red, and out into bright red. It's what you expect to see, but it doesn't always follow that particular pattern. There's no always in trading. And then up onto, let's just move that out of the way, up onto the 1 minute. There we go. What have we got in the 1 minute? Come down onto the volume point of control, where so we expect the market to congest at that region. That's why the market is pausing. We've also got, let me pull the VIX over here, so you can see it. This is the VIX on trading view. This is on 1 minute, 5 minute, 10 minute, and the daily chart. We've had this strong surge, no great surprise. Now it's starting to roll over. This is on the daily. We're starting to see a pickup in it. We're starting to see the VIX rally a little bit, which is why we are starting to see equities come off a little bit. And if you go over onto the, well, you can see it here. This is on the CSI. I don't really need to go to a chart. This is on 5 minute, I think, or 3 minute. What we're starting to see here, this magenta line is actually the yen. So we are seeing some yen buying coming into the market, which again is no great surprise given what we're seeing in this very tiny slither of price action in terms of intraday. But as an intraday trader, these are all the fragments of data that you need to have in order to trade successfully. You can see the transitional changes starting to occur on the slightly slower time frame Renko here. This is on the 30-second. We've gone into red here. You can see the trend monitor took a while. The trend dots came down. We get to this level. It's starting to transition. But over on the 30-second, it is still in transitional phase, and nothing has changed over here on the slower time frame of a minute, which is why it's so critical that you as a trader decide what you're going to do before you do it. If you're going to trade a 5-minute time frame or a 15-minute time frame, that's fine. Stick to it. Don't go out to the hourlies and the 4 hourlies if it doesn't quite pan out. The same is true on if I'm on a 15-second chart and I'm looking at I decide to go out to a 5-minute chart or a 10-minute chart, you know, don't do it. Don't go there. Decide what you're going to do. I'm going to scalp this market. I'm going to be on 15-second, 30-second, and a minute. That's really my frame of reference, all I'm interested in, and I'm just going to stick to that. Because once you start to drift out to those slower time frames, wherever you are in the time slice, if you will, it's fatal, because what you're looking for is a confirmation of your original decision. And you know, we all suffer it. It's part and parcel of trading, but you just have to set your stall out, decide what it is you're going to do on that particular trade, and just stick to it. And if it doesn't pan out, it doesn't pan out. So what? Get on to the next one. You know, it's no big deal. You've lost some money. No one's died. Just get on with it. And that's what it's about. And we say it in the program. We've said it many times on these webinars. This business is about, you have to learn how to lose comfortably and have no regret. Just, you've lost. It's part and parcel. So once you've learned to lose, you will then be comfortable with trading and accepting the fact that loss is part and parcel of this business. And that you were wrong, as Anna said, you were wrong. You know, leave your ego at the door. You were wrong. The market's always right. It's a fact of life. So just accept it and get over it and get on to the next one. And just, you know, it's money. And as long as you're trading within your risk and money management rules, and you've got reasonably tight stops, and you're trading within that remit, then that's fine. You've just lost a few dollars. Get on to the next one. And you know, don't revenge trade because you're angry that you were wrong and the market slapped you. Market doesn't care about you. Let's go back onto, I'm just going to head over onto the, let's see what's going on across the piece with them. I mean, this is on the daily at the bottom here. I've got YMNQ and ES. They are pretty much in agreement today. Not always the case. We've had a lot of disagreement over the last few months, with particularly with the NQ being driven by the big four, big five stocks really, and not a lot else. Whereas the other two have been a little bit more laggard, and we've seen days when the NQ's been up and the other two have been down, and on some occasions vice versa as well. So it's been interesting. And what's also interesting about using this is, if you like, using related markets to give you help and information. This is the ES on 5 minute. It is a related market. Obviously, it's the same risk profile, but it also gives you a view of, you've got this big volatility candle here on this particular time frame. And then you've got a huge amount of volume coming in under this particular candle. So what is that telling you? Is this, price in agreement, or is this price in disagreement? Well, clearly it's in disagreement, because if that were in agreement, this candle should be much wider and right up the top here somewhere. And it isn't, it's compressed. So what is that telling you? It's telling you loud and clear, there is selling coming into the market. We've had and it's preceded with a volatility candle. So you know for a fact, this has been rushed up by the big operators, the market makers. There's then a deal amount of selling going on in this particular candle because it's narrow spread. So the effort is going in and it's not going anywhere. The analogy we use a lot in the Forex trading program is really, imagine you're driving up a very steep, icy road up a mountain somewhere, and it's gradually steepening all the time. So it's getting ever steeper. And at a point, you will get to a point where you actually don't go forward at all. The wheels are just spinning on the ice. And that's really what it is, because the volume of pressure is going into the market. The sellers are dumping into the market, into a market of weakness, but the price action doesn't reflect that. So you get this compressed price action with a ton of volume. In other words, effort and result are not in agreement. Simple as that. So it's what you expect to see. Now, what's interesting in the next two candles, you've got two identical candles pretty much, ignoring the fact a little wick to that one. But if they're pretty much the same, you can say they pretty much are. What's actually happening? Well, you've got the volume falling away. Now, if that is going to continue and is going to reverse quite strongly, then by all things being equal, you would expect to see certainly volume more or less the same on these two candles, if not rising, and it isn't. We've now got a little doji candle form there. So, you're going to see a lot of that over the next few hours and days as well. And you can see it over here on, just pop up the 5 minute as well. Similar sort of picture here. No volatility on that particular candle, but again, you've got volume falling away on that, and it's really falling away per se as well into the next candle as well. So, the volume selling is not increasing, it's actually diminishing on that reversal lower. And it's a classic anomaly in terms of looking at price and volume over a group of candles and bars as opposed to one. That said, the trend monitor is still holding good to bullish. So if you were trading this to the long side and you've made a chunk of money in here, may well be time to either remove part of that from the table and bank it and just wait for the next phase of price action to develop. Just keeping an eye on the VIX, which is going sideways at the moment, which is why we're seeing sideways price action on the indices as well. Let's just go and have a quick look at gold. As Anna said this morning, one of the things to watch over the next few days and weeks is the relationship between gold and the dollar. And if they're both going up together, then watch out. We have had that over the years, and several, trying to think of, there was one around one of the Euro crises that went on for about 4 or 5 months, I remember. But gold at the moment is, well, it's ticking up today. It's got a long battle ahead if it's going to battle back. It's got the volume point of control up here. We've got a ton of volume. We've got resistance ahead, so we've got a huge amount of volume to break through. This is on the day, but you can see the volume is falling away, so it looks a little bit weak at the moment, not particularly strong. And over on here, I've got the time and sales window. I've got time and sales window on running on several charts. And what you're looking for on time and sales, we're going to do a lot more on time and sales once we launch the trade station. What you're looking for the whole time is blocks of sales going through the market, and how those sales, or how the market is reacting to those large blocks. All these 1s and 2s orders going through are really no interest. They have no consequence. What we're looking for, and I think I've got this set to 40, I can't remember now. What we're looking for is those large blocks going through and the reaction of the market to those. That's the key thing. If the market does nothing and there's big volume going in, then it's looking weak. Let's go back onto let's just go back onto the Renkos again, see what's going on. Actually, let's go to multiple times, probably better over there. And then I'll go over onto tick charts. There we are, back on the multiple time frames. And it's all a bit lethargic at the moment. Let's pull the VIX over. That's what the VIX is doing, starting to tick up a little bit now. And I'm sure you know, as the VIX rises, equities fall and vice versa. Which is why it's important you have it up in whatever market you're trading, because it gives you a heads up in terms of risk sentiment. Back to the 15-second chart. Trading around the volume point of control again. We've got some strong areas building. We've got a ceiling building above. We've got a floor here. We've got a lot of price-based support below as well. You can see here the dotted levels of the accumulation and distribution indicator, price-based resistance, very minor. This was tested once, this was tested once. This has been tested twice, so it's a little bit stronger. This is very strong. This is very strong. And this cluster under here as a group is very strong too. And now you're waiting for a breakaway. If you're a breakaway trader, whether it's on 15-second or a minute or 5 minutes, whatever it may be. Just see what's happening in oil. Yep. That was the, let's pop that up. That was the move yesterday. You can see the amount of buying that came in yesterday. That's on the daily. Decent volume under there. That's why we're seeing a rally today. Where's that going back to? Probably back to 40 spot 50 in due course, where the volume point of control is. Let's just see what's happening in terms of the dollar. This is the majors matrix, so this is on spot. You can see the dollar over here. This is on 5, I think. Yeah, this is on 5 minute. Okay, so we've still got dollar selling, and that's really reflected across the piece. We've got cable rising nicely, dollar CAD's falling nicely, Aussie dollar's rising nicely, as is euro dollar, dollar Swiss is falling nicely, and the New Zealand dollar's rising nicely. So an instant visual picture of what is going on in terms of whether we're seeing dollar buying or dollar selling across the piece. And of course, that's also reflected over on the currency matrix. On the array, I think I've got the, I've isolated out the yen, because that was at the time, the yen is a great pair to demonstrate this on, because the yen is always the counter currency. So when risk on is very strong, then all these pairs will be up on the top level here, because you will be seeing selling of yen. Now, when we started the webinar, and indeed just before I switched over, these were all very sharply higher. They were all up here, and now they're starting to sweep down. They're starting to move away. That strength that was denoted by a yen selling is starting to diminish a little bit. They're starting to sweep lower. You can literally see it on the screen. This is on 3 minute, 5 minute, 10 minute, and 15 minute. And it's starting to weaken, and that sentiment is weakening because risk on sentiment is weakening. It's reflected in the yen. You'll see it in the VIX. You'll see it in equities, and that's how markets are interrelated. It's why we put the complete Forex program together, because it brings together all the 4 capital markets, whether it's bonds, whether it's commodities, whether it's equities, whether it's Forex. Forex sits at the center. It is the heart of the financial world because it is the gateway through which money is exchanged, both in terms of the currencies themselves, but also in terms of the asset transfer. When you're moving from one asset to another, you've got to do that in cash somehow. So you're selling one asset and buying another. At some point in that transaction, you've got to go into cash. And that's why the Forex market is the kingpin, is the linchpin of everything. Everything rotates around the Forex world. And it's not something that most people seem to understand. Let's have a look at the currency futures. Exactly the same sort of picture. Just reload that one. There we go. That's the 6A, that's the Aussie dollar, the 6B cable, 6C, that's CAD dollar, not dollar CAD, because it's all inverted on futures. 6E euro dollar, 6J is yen dollar, because again, the dollar's inverted, because everything in futures is quoted against the dollar. So with the futures, you get an absolutely straight line view of strength or weakness in the US dollar. And you can see it visually. The trend monitors blue throughout. You know, that's what you expect to see, all moving away from the volume point of control. The weakest one is this one, which is the CAD dollar, you know, oscillating around. But nevertheless, you know, the others are moving pretty strongly. And the reason the CAD dollar is a little bit weak at the moment, as you can see over here, the CAD is actually falling, but it's falling with the dollar. So where you get those falling, that is going to represent certainly congestion at any rate, and not the strongest. And the reason you get these very strong trends is because you're looking for currencies which are rising strongly and the counter currency which is falling strongly. And that's the reason that you get the strong trends in the first place, based off the currency strength indicator. You can see all that moving along nicely. Let's just go back onto the, see where we are, see if we've actually moved away. Nope, we're actually in a pause point. No great surprise.
They come off slightly.
They've come off a little bit, but yeah. So they've just paused a little bit there, and you know, no great surprise. Let's just pull the VIX over again. There we are. And that's what we're seeing, this little run up. You know, we're starting to see it curl up, starting to move up here, and we're starting to see a small wick form at the bottom here over on the daily. And that's why we're seeing what we're seeing at the moment in terms of the indices. So an interesting day ahead. I hope you've enjoyed the session. I'm going to pause at that point, if I may. Not sure, are there any questions coming up? Nope. Great, okay. There we go. Just to highlight one or two of the sites, what I would suggest is, certainly on a day like today, you get hold of some decent betting sites. You can keep an eye on the odds there. It was certainly interesting for us in the UK with the recent election in December. And from memory, I can't remember, I think it might have been Sporting Index at the time. And 2 hours before the election for us closed at 10 p.m. in the evening, a lot less complex than the US one, obviously. But at 8 o'clock that evening, the odds suddenly started to swing violently towards a bigger majority. And that's the point at which we picked it up. So we had 2 hours warning through the betting sites. Where they got that information from, I don't know, but rest assured they got hold of it. And the outcome was, if you weren't following it, if you're not in the UK, but it was a huge majority. It was much bigger than had been predicted by any of the forecasting companies or indeed the betting companies. So you know, it's worth keeping an eye on what is going on in terms of the betting odds and how they're changing, particularly for something as major as this. Let's click that off there. You just look at the numbers between them. I won't go through how these are very simple. It's very simple numbers. Probably it depends what odds you're used to, whether you're used to American odds or or UK odds. They all differ, but they all give you the same sort of similar information, obviously. And it just gives you an indication of who is a favorite, who's not favorite, how close this is, how not close it is. These are as good as any. I mean, this gives you all the information you possibly want to know. In fact, on here, I think you've also got all the other stuff about everything from states to all sorts of things on here. It goes on and on and on. But just keep an eye on them. In terms of the indicators, you'll find them all over here at quantumtrading.com, MT45, NinjaTrader 7.8, and TradingView. TradeStation is coming, I assure you. Both the 9.5 version, which is Interactive Brokers and TradeStation, and also version 10, which is TradeStation Securities. So they will both be launched with 2 sets of indicators for both. So if you have an IB account and you want to run it through TradeStation, you can. It will provide the data feed, and you will have the quantum indicators on there as well. So that's TradeStation. Once we've wrapped that up, we will be dropping onto, we've got loads to do, but we will be dropping onto TradingView, porting all the indicators over there that we didn't do first time round because we couldn't, because of the Pine script didn't have the functionality we needed. It has it now. So they will be added. So there'll be the currency matrix, the currency array, the currency heat map will be there, the VPOC, everything else, they will all be there. And then the price of that particular package will go up to the same price as the MT45894. So if you've bought it, all those customers, if you've bought it as a customer of the full package, you will get those free upgrades. We're not charging anything for those. You'll get them free automatically to your account. So it's not a bad time to invest in the TradingView package because you'll get them all for, you'll save yourself $250 odd, I think, something like that anyway. So that's where the indicators are. You'll find Anna over here, annacooling.com. All the books up there on in Kindle and in paperback, and all the other links to all the various pages. And this is the Forex Trading Education site, quantumtradingeducation.com. It is a complete Forex trading program because it covers everything you need to know. There's something like 450 odd modules in there. There's 250 hours of video in there. It covers everything from psychology, fundamental, relational, technical, mechanics of trading, and then there's 250 hours of video. VPA chart examples, how to use the indicators, pulling it all together, topic webinars, webinar library, and the resources section. We're very proud of it. We've had fantastic feedback. We have students who are doing really, really well on the program. It's all backed up with the VPA chat room, and you will be among friends. And of course, Anna and I are there pretty much every day to answer any questions you may have and help you along. That's it, we're done. Enjoy the rest of the trading day. Enjoy the rest of the presidential election, which is always great fun, I'm sure. If you're in America, it must be great. We will see you again same time next week, or at the London session, which is 7:45 UK time on Tuesday. So hope you've enjoyed today. Thanks very much indeed for coming along, and we will see you again soon, and bye for now.